A very warm welcome to IDFC First Bank presents Leaders of Tomorrow Season 12. I'm Ritwika Gupta. Tonight the spotlight is on Runaya, the sister company of Vedanta Limited. Now Runaya was started to bring new technology and sustainable solutions to India's manufacturing industry. It was founded by brothers Runaya Agarwal and Naivedya Agarwal, and the company aims to be a leading partner to the resources industry. Tonight I'll be chatting with the MD and co-founder Naivedya Agarwal about the company's vision and how they aim to make manufacturing more sustainable. And in the second segment, I'll be chatting with Jamal Mecklai, CEO Mecklai Financial, on the current financial landscape for MSMEs in India. Naivedya, welcome to Leaders of Tomorrow. Thank you so much for chatting with us today.
Thank you, Ritwika. My pleasure.
So, Naivedya, I want to start off by asking you an overview of India's manufacturing sector. What are the biggest opportunities do you see in this space, and what was the market gap, that you identified that led you to form Runaya?
So, I think, as India transitions now from a $3.5 trillion economy to a $7 trillion economy by 2030, there are a couple of shifts that we identified that would lead this transition.
Okay.
And we're a true believer as a company that this transition will come as a result of manufacturing, and manufacturing playing an increasingly critical role in our GDP growth. And within manufacturing, I think the current government, with the Atmanirbhar Bharat and Swachh Bharat, are very, very clear on the priorities. And the government is also knows that this transition will primarily come as a result of shift away from commodity manufacturing to technology driven manufacturing, and backward integrating as far down the value chain as we can, and not becoming an assembly capital of the world where a majority of the input components are imported and only assembled in India. I think it's very clear that backward integration is going to happen down to the smallest component, so that all of the value of a particular product or end use is actually generated in the country. And the other shift that's driven part by companies becoming more sustainable and also from government regulations, we feel that sustainability will play a large role in this shift as companies develop more ESG forward practices, shift a larger part of their energy usage to renewables, and as EVs also start playing a larger role. So these are the two big themes that we see playing out over the next decade.
Okay.
And what we did once we identified at Runaya that these were the two themes that we wanted to play in, we then went about it fairly differently to identify the specific gaps that we wanted to address. We went with these two themes and we appointed consulting firms. So we spoke to the likes of Accenture, KPMG, PwC, etc. And we started with a long list of about 2,000 opportunities within these themes.
Okay.
And then used a lot of filters to really figure out exactly how we wanted to play in this field, in this space, based on what we saw was our right to win.
Right. All right. Speaking of sustainable manufacturing, while there has been some progress in the manufacturing industry, but I think we still have a long way to go. What would you say are the 3 or 4 key considerations or factors that businesses in this industry need to keep in mind to embark on this journey?
So I think a lot of the shift initially is policy driven and investor driven. If you see, all of the large banks, lot of the large private equity funds, global pool of capital that are coming into India are insisting on a sustainability agenda as a requirement for their investment. So I think a lot of that push is coming from access to capital.
Okay.
people are being almost forced to make that change, without which they won't get access to that capital they need to grow. That being said, you're seeing so many young entrepreneurs in India today, focusing on battery recycling, e-waste recycling, plastic recycling, focusing a lot on post-consumer waste. But the big gap, that we continue to see in the market is the focus on industrial waste. So if you look at, the post-consumer waste that is generated annually, municipal waste, water, plastic, etc., is expected to be in the range of about 3 to 4 million tons, whereas industrial waste is 100 million tons.
Wow.
Right, but there is not enough focus on that. So I think companies need to start focusing on the ESG agenda. And to do this, I think one, of course, is the push towards renewable sources of energy. And the other one is that digital and technology will play a huge role in this, to actually allow processes to become more efficient, plants to deliver higher output with lower input material, reduction of scrap, etc. All will help in improving output as well as increasing sustainable performance.
Now I have read that Runaya aims to achieve a revenue of 1,200 crore rupees by FY25 and 2,000 crores by FY26. How do you plan to do that?
So our growth plan for this year is already being delivered. So if you look at our Q1 results, we're already on track to deliver the 1,200 crore run rate. This is one, of course, it's on capex. It's already been spent and will be coming online in the next month or so.
Yeah.
And if you look at our different businesses, they are all growing organically for the next year. The big growth is coming from our, we've just brought online a facility to manufacture, to recover metal from zinc mining, smelting waste. So in the zinc value chain, smelting waste contains, of course, zinc, lead, silver, which are the primary metals produced by a zinc supplier, but it also contains, cadmium, cobalt, lithium, nickel, etc. And our eventual goal is to recover about 25 to 27 minor metals within this complex. So that's the growth, for this year. And if you look at next year, all of our businesses have, capex requirement. We will be more than doubling our production of FRP rods to target the global telecom industry, as we see that, data centers and AI, becomes more and more prevalent. The use of fiber optic cables is only going to grow exponentially.
Tell me, Naivedya, how has the legacy of belonging to a renowned business family, shaped your entrepreneurial perspective? Have you received any advice from your father or your uncle, perhaps?
No, of course, right? So when I first came back to India after my MBA, I had the option of joining Vedanta.
Yeah.
But at that time, took a call that I was very inspired by my dad and my uncle and what they had built. And some of the early stories about how their first 6 or 7 businesses actually failed before they got their first cable plant up and running, which was successful. So I thought, why not throw my hat in the ring and see if we can start and try and create something of our own.
Nice, fantastic. So, our show Leaders of Tomorrow, it also caters to a lot of MSMEs, smaller businesses as well. A lot of young entrepreneurs watch our show. India has this vision, to become Viksit Bharat, and I want to understand from you, I think, how can MSMEs in the manufacturing sector play a role, in to become future ready, in the manufacturing industry?
So I think startups are a key for innovation, right? Because a lot of times larger companies find it difficult to innovate and move away from a proven business model. So a lot of the growth is going to come from MSMEs. And I think the way that they will contribute is by tackling some of the larger problems around sustainability, around backward integration, would all come from SMEs.
Right.
And what we're also finding is that global companies want to enter India. They're looking for the right partners to leverage, the India story. They understand that they can't come alone. Right. So a lot of time MSMEs are the best partners for these global firms to come in and make their India footprint.
Right, and just picking up from what you said, the theme for our show this season happens to be powering entrepreneurs for the global stage. And I understand Runaya has a lot of global partnerships and associations as well, Taha Holdings, and many more. So, my next question and final question to you is in two parts. One is how you're planning to leverage these associations, and secondly, why are global collaborations very crucial today, for entrepreneurial growth?
So I'll take your second question first, if that's okay. We are a firm believer, and this is a very contrarian approach to how a lot of entrepreneurs think. We truly believe that you need to be rich before you earn the right to innovate. There's no point in innovating and trying to create something new when you don't have the cash flows.
Yeah.
So we actually believe in benchmarking with global companies, getting the best technology out there, and then working to improve those technologies is a far more sustainable path to growth and profitability. So I'll give you an example. A collaboration with Taha that you mentioned. So Taha had the global benchmark practice for recovering green aluminium from aluminium rust. And when we got our first machine from Taha, it had the processing capacity of 150 tons of dross per machine per month. We now operate those same machines at 450 tons per machine per month. Right, so our innovation center came in, really improved the technology there, and from here I'll lead into the second question that now that we have the IP on that 450 tons per machine per month, our technology partner has come to us saying that why don't we partner together to tackle some of the global smelters. Right. So I think global technology is the key. It allows you to learn from the best in the world and take advantage of the India cost base, India manufacturing capability, Indian regulations. And once you set up a base in India, it really gives you the right to then export from there all over the world.
Well, fantastic. It was lovely chatting with you. Thank you so much for joining us today.
Thank you. Thank you so much.
It's time for a quick break here. We'll be back shortly. Stay tuned. Welcome back. You're watching IDFC First Bank Presents Leaders of Tomorrow Season 12. In this segment, we are going to focus on the current financial landscape for MSMEs in India, managing currency risks and dealing with the volatile Indian rupee. I'm now joined live by Jamal Mecklai, CEO of Mecklai Financial, who is in fact joining us straight from New York. Thank you so much, Mr. Jamal, for taking the time out to speak to us today. So to begin with, tell us, how do you assess the current financial landscape for MSMEs, especially in terms of accessing foreign exchange, and managing currency risks?
Well, it's always tough for small companies, and I think, RBI has done a lot of stuff to try to make life easier from an FX standpoint for small companies. In particular, CCIL has got this platform where companies can get a, quote, fair rate. I mean, normally, companies, small companies, and even big companies sometimes pay an outrageous spread to the banks. Okay?
Right.
Having said that, I feel RBI needs to be more demanding of the banks. Because, see, banks are not happy about this, right? So they make it difficult for small companies to utilize this facility, which has been developed specifically for this. So I think, RBI should do something like ask all banks to, on a quarterly basis, tell them the number of MSMEs that they have or the percentage which are using the platform. Because the platform, the rate, what the platform does, what the CCIL platform does, is you get access to the interbank rate, and the bank has to define the spread they're going to charge. So let us say for a small guy, they would charge 10 paisa. So you would get 10 paisa from the interbank rate. Now, without this, people would be paying 60 paisa, 80 paisa, 1 rupee. So that's 1%, improvement that's possible, which is, I think, a great thing. As I said, this whole platform was conceptualized by MSMEs, but I'm not sure how widely it is being used. It's being used, it's good, but RBI needs to put a little more pressure on the banks, in my view.
Sure. Mr. Jamal, companies across sectors are grappling with the volatility of Indian rupee, which has fallen to an all-time low. How would you advise businesses, especially exporters and importers, to navigate this environment effectively?
It's a difficult situation, right? Because RBI, for reasons best known to them, my sense is that RBI is wanting to hold the rupee really, really tight. And that makes life very difficult for both exporters and importers, right? For exporters, see, the premiums are very, very low. And that's actually a good thing because it's a reflection of the fact that Indian inflation is under control. So that's great, right? But the fact is, when there's a very small premium, you feel, why should I sell? Maybe the rupee will fall by 50, 60 paisa, right? In the old days, you had a premium of, 80 paisa, 1 rupee, 2 rupees. It was fine. It was comfortable selling. People get caught in a trap of that, but, for exporters, I'm getting no premium, but I only need a small move for the rupee to improve my position. For importers, why should I hedge? Right? So basically what's happening is there's a lot more risk being built into the system. I think that RBI needs to recognize that actually volatility per se is not bad. Volatility is actually natural, right? So they need to allow a little more volatility into the market. That would compel all people, including MSMEs, to be a little more conscious of risk and to manage their risk. I mean, there's many ways to manage risk. That's another story. But at least I'm saying the setup is wrong, in my view.
Right. And how important is it to review regulations that might be holding back smaller businesses? And I'm talking about the one you mentioned in an article, where you stated only companies worth more than 200 crores can use certain cost reduction strategies. Do you think getting rid of this rule would empower a large segment of businesses?
Well, it's a good idea to get rid of the rule. And the truth is, RBI has allowed it now. Okay, RBI has now told banks, you can sell these products to companies if you are comfortable that they have the capability to manage that risk. So fundamentally, these companies need to, I don't know, different banks may have different requirements in terms of they would want them to have a policy, they would need to make sure they understood. I mean, the products that we're talking about are not particularly complex, right? They're basically where you buy one option and sell one option. You sell the option to reduce the price of buying the option. So what that does, that gives you a fixed, narrow range in which your value will move, right? So it is been allowed, which is good. But again, I come back to my first point. RBI needs to monitor the extent to which banks are allowing or enabling companies, particularly small companies, to utilize these facilities. It is a good thing. It is definitely a good thing. It's a good thing RBI has done it. But like I said, they need to step on they need to keep the banks in line.
Mr. Jamal, how do you perceive the impact of technology on reshaping the financial landscape for MSMEs?
Well, hey, I mean, technology is reshaping everything, and it's great. And the basic, what you need to understand is, banks are business entities. They will try to make money wherever they can. They will try to, like everybody, not like everybody, but like some people, they will try to squeeze wherever they can. So even though all of these technology initiatives are there, my belief is that they are not being utilized fully. To be fair, on the other side, MSMEs also need to groom themselves to be able to have the technology skills available, have the sort of market or risk management skills available. Now, for a small company, it's impossible and foolish to spend money to get a high value person to manage your risk. Okay, here I'm selling myself, but there's other companies also who help companies hold their hands in the market. So our business is doing very well right now because there is such a need. Okay. And I think that everybody's got to shape up, but that's life. You've got to keep shaping up, and technology is accelerating that need.
So I also want to touch on some of the key considerations, for companies when implementing complex, hedging strategies like the zero cost range forward. What can you tell us about that?
No, as I mentioned earlier, range forwards are not that complex, first and foremost. And they are very useful, sensible tools to use in certain circumstances. Certainly in the circumstance we had where the rupee was very flat and you TK, and the premiums are very low. So you block a range. See, if you just hedging eliminates all opportunity, right? Now everybody wants to hedge, they want to reduce the risk, but they don't want to eliminate all opportunity. So you can use range forwards for that. There are other instruments as well. Range forwards are really actually quite simple. You have to see now, again, I come back to my villain of the piece, which is the banks. One of the problem with buying range forwards is the pricing is not transparent, right? Even on CCIL, you won't get the price for a range forward. So you will need to make sure that you've got a reasonable price, or whatever value you get will be eaten up in the spread. So there's, again, technology comes in. There are platforms that provide pricing for various different, so again, it's spot pricing. Pricing for range forwards is a little trickier. So, companies may need help to on the pricing basis, not on the instrument basis. The instruments are fine.
So what is the one big common mistake that you have observed among MSMEs, regarding their financial management? And what advice would you offer to mitigate these pitfalls?
See, to my mind, although, our focus is primarily on FX, my thing is that a lot of companies have and this is true of MSMEs and large companies, by the way, they have this belief that the rupee is always falling. So why should I hedge, right? If he's an exporter. Now, the fact is the rupee is not always okay. And if you go look over the last 6, 8, 10 years, you will find there are many years where simply selling forward would have been better than staying open. There are years when staying open would have been better than selling forward, which is why you can't say, I'm going to do this always. You need to think about it. You need to have somebody help you to support that. And you cannot function on, you should not be working on a basis of I'm not going to do anything, because that means I'm going to carry infinite risk.
Right. And before I let you go, the theme for our show this season is powering entrepreneurs for the global stage. Tell us, what strategies do you believe MSMEs should adopt to enhance their global competitiveness, considering factors such as currency fluctuations, market volatility, and international trade dynamics?
Basically, you need to build the strongest processes you possibly can in all areas, whether in terms of supply chain or in terms of financial management or in terms of FX. And as I said, that's the basic answer, right? The details of it will depend on the particular business, on the market circumstance, on the business circumstance, and the like.
Well, absolutely. Thank you so much for joining us. It was lovely speaking with you.
Lovely. Pleasure.
And with that, it's a wrap on this edition of IDFC First Bank Presents Leaders of Tomorrow Season 12. We hope you enjoyed the conversations today. Thank you for watching. Goodbye.